Hey hustlers, welcome back to the channel. If you're new, welcome. We talk about making sense of our finances, making better informed decisions about our personal finances, and of course living our best lives. Click that subscribe button, join our family, don't leave. You will find so much value on this channel. So today's video is a bit different. I wanted to share with you guys a little bit of a story time based on my personal buying process, home buying process, and why I don't own property yet. I had someone ask me the other day about investment property, what my opinion was, some tips, and I thought I'd share my story first rather than giving advice. I'd rather give advice on things that I've personally have experience in, and I thought, let me do this video, sit down and just chat with you guys, give you guys a bit of a story time, and then of course at the end of the video we'll be going through pros and cons of buying versus renting. So if you want to find out what the pros and cons are, of course watch until the end of this video, because we'll just be going through what they are. Okay, so my property buying experience process started last year in March. I sent an email to Better Bonds. I had worked with Better Bonds before because I was working as a part-time property curator for a property development company. So I was aware of their services, I knew what they did, and I just sent an email to find out how much I would potentially qualify for should I want to buy my first property. Mistake number one, and I'll explain to you guys why I consider this a mistake. So I sent the email. The lady was very nice. She called me, we chatted a bit on the phone, and then I sent her some of my documents, bank statements, pay slips, all of that stuff, and then she came back with a response, or a pre-approval certificate, basically saying this is how much I can shop around for. This was in March, and that amount I kind of knew already what I would qualify for, but I just wanted an expert's opinion. I had done an affordability test online already, so I kind of knew more or less where I was, and yeah, so she came back and she kind of confirmed what I thought I'd qualify for. And I had been looking online at the time, but what I could afford at that time wasn't an area or place I wanted to live in. I was also looking at it for potential investment property instead of me living there, but I hadn't fully committed to it. I just wanted to look around and have better confidence in knowing how much I can qualify for. Fast forward to April. Last year I got promoted, obviously that's increasing my earning and all of that. And then in June I contacted her again to say, hey girl, I've now gotten a salary increase, you know, I've gotten a promotion, let's look again at what I can qualify for. Mistake number two. So why do I call these mistakes is because I was doing hard inquiries, because basically she has to check my credit score. She was doing hard inquiries against my name in a space of a few months in that same year. That's then making me look like I was looking for credit or was looking for to get into debt. Then it negatively impacted my credit score. So I would say if you are wanting to start your property buying process, rather do your own inquiry on your own. There's lots of affordability free affordability tests that you can do online that kind of give you an idea. Only start making inquiries when you are 100% sure that you are buying. I was just making inquiries wanting to know exactly where I kind of stood, what I could afford, and all of that stuff. It wasn't basically because I was intentionally wanting to buy. Of course I was in the market, I was looking, but I just wanted for myself to know what I could afford, but I wasn't 100% certain. So please only do this when you're 100% certain, because those hard inquiries do count against your credit score, and I still have them today in my credit score report, because I get it every month. I do my credit score with credits. I do my credit score inquiry, you know, with credit scores. So I will leave them down below if you want to check your own credit score. But yeah, it was very with clear score, sorry. So for me it was a learning curve for me, and that's why I called it a mistake. So then in June she came back, and of course I knew I could potentially afford more based on my living expenses were still the same, so I didn't adjust my lifestyle to match my new income. I basically continued to live below my means or within my means, and I I just continued living the way I was living, so nothing of mine increased. So when she had a look at my bank statement again, it kind of was still the same expenses that I had. So she came back with another pre-approval certificate that gave me a bit more confidence to look in an area that I would have potentially liked. I think it was August or July, I'd say September, maybe August. I went and viewed some properties. The one property I viewed was in an area that used to be a really good area, and because of what has happened in the area with lots of students being in that area and lots of prostitutes also flooding that area, the property price dropped quite significantly. That's then making it for me a bit more affordable. The area is not too bad, but it's just what has happened to the area that has caused it to depreciate and not grow as much or appreciate in value as it used to before. A lot of people also moving out the area, so there was a lot of movements around that area, but it was what I could potentially comfortably afford. I then met with an agent, we went to view a flat, and afterwards he was like to me, to be quite honest, I wouldn't advise that you buy here. Basically listing the things I've said. There's lots of prostitutes now in the area, students are flooding the area, it's becoming more of a student area, people are moving out of the area, that's then depreciating or not growing or appreciating this property value as much as it would, and he doesn't want me to buy. And then in 3 years time I contact him to say, hey, I want to sell. So he was like, he'd rather not, I'd rather not get involved in that property. And the area that I had wanted to look in or buy in, I couldn't afford on my own. I'd have to buy with someone else. And of course at that time my partner was also speaking about us buying property together, because he was coming with me to the viewings. And the only issue with me was that at the time I was like, I'm not buying property with a boyfriend, I want something more secure. I want commitment, I want to know that we are in this for a long time. Of course we had been in a long relationship, but I just wanted commitment. Little did I know that that was already in his plans, and in November he then proposed, and that kind of shifted my urgency of finding a place of my own, and I'm now focusing on something else. And during this process, obviously with me looking and finding more about buying property and doing a budget, as someone who is very strong held and very a budget is very important for me, I realized that buying property isn't what it seems. A lot of banks are now looking for more than 10% deposit, some cases. So one, I had to have a 10% or more deposit, and I had to have transfer costs or attorney fees. Now with last year's February budget speech, the properties now at $1 million or less do not have transfer costs involved. Anything above $1 million, then you have to pay transfer costs, but that does not mean there aren't any other costs involved, like bond registration fees, attorney fees, and so on and so forth, which I have to pay out of my own pocket. This is very important. So you need to calculate and find out exactly what the other costs involved in buying a property are. It doesn't just end with the bond registration fees and the attorney fees and the deposit. It also goes further into the bond repayments monthly, the rates, the taxes, the electricity, the water, that is over and above everything. And I didn't want to put myself in a situation where I would be strong, like held tightly, and I can't move. There's no movement, and basically all my money is going towards paying for this house. I can't even put furniture into it or anything like that. So I realized that as much as it was important and a great thing that I wanted to achieve, it wasn't the right time financially for me to make. And one thing that I have to say was a great financial decision was that I was living on my own for a very long time until my cousin came and worked in the same company I worked for. So we then obviously moved into a shared flat. So we currently share a flat, which decreased a lot of my living expenses, because now I am sharing living expenses with someone. Food, rent, electricity, petrol, that is now shared, which is giving me back more money into my bank, into my disposable income, and I now can save more towards buying my first property, which I'll now buy with my partner, because we are currently engaged and we are looking to buy our first property together. Also, another thing I would advise is, if you're looking into buying property and you can see that you can't do it on your own, maybe get someone to buy it with. Get into a contract, an agreement contract, to be like you guys are having shared expenses. A lot of the times this is one way people can get into property, by doing a shared partnership and buying property together. Now make sure that the person you are choosing to buy property with is reliable, someone you can trust, and all of that stuff, because you don't want to be in a position where you've now signed for this long-term loan and the person bums on you and you're now left with it alone. So you have to co-sign on it and have equal responsibilities towards the property. So that is essentially why I don't own any property. One, I couldn't afford to buy in an area that I wanted to buy. I was advised not to buy in an area that I could afford, and I just realized that I didn't want to be in a situation where if a geyser bursts, I have to wait for the insurance to pay out before me sorting it out myself and then using the money that was paid out by the insurance to replace the money I used. I hope that makes sense. So just make sure that you are 100% financially ready. You understand what the financial implications are of owning property. It doesn't just end with the bond repayment, it goes way further and over and above that. And that's just basically my personal stance on it. I do see myself owning property in the near future and all of that stuff, but yeah, so that's just literally what the decision was for me. Cool, now let's go through the pros and cons of buying property. I'm going to start with the buying pros and cons, and then I'll go into the renting. All right, so let's just go through this really quickly. One pro of buying is the long-term benefits that you have, such as security, potential growth and interest in your personal wealth, and just also equity, because property over time has the assumption that it does appreciate in value. This is not always the case, because this is something that I found in the area that I could afford to buy. It had depreciated so much based on the factors and things that were happening around that area. Another thing is that obviously a potential appreciation in value, meaning that if you were to sell this property in the future, there's a potential profit that you can make on the sale. Another thing is that buying gives you legal property. It gives you greater freedom to use over that specific property without having any restrictions from a landlord. The next thing is that there's creative control on the property, so you can renovate it, you can decorate any way you see please, you can landscape it, you can alter it however, because it is your creative control. You have full control over it. Another thing is that if the property has an outbuilding, this is a potential income source, because you can rent it out and use that income to pay off the home loan. So that's then you're going to be paying more towards the home loan and basically paying it off quicker. And then another thing is that if by you ensuring the monthly repayments on your bond, you are then thus increasing your credit score over the period of time, so you can increase and improve your credit score if you are consistent and paying your monthly payments every single month. Another thing is that you have an option to refinance on your home loan, for like large purchases or renovation, so you can take money and basically refinance from the existing money that you've contributed to obviously renovate if you need to do a renovation, or for a large big purchase. Cool. Then a con of buying would be that it's a big financial responsibility, which is something that I learned. I knew that it was a big financial responsibility. It doesn't just include the bond repayments, it's got other additional costs involved as well, and this is something you need to be ready for if you are buying. Another con is obviously the additional costs such as taxes, rates, electricity, municipal levies, and all of that stuff that you have to pay on a monthly basis to upkeep the home. Another thing is that there's the risk of not making a profit if you do sell, which is something I also found out when I was in the buying process. And this could just be based on recession, high interest rates, the area that you've bought in is no longer desirable, and this area I was wanting to buy and was longer desirable. People were moving out of that area and all of that stuff. And then another thing is there's less mobility in moving, so you can't just up and leave. You have to sell, which is a longer process, because you have to sell, then use the proceeds from that sale to buy a new home. So there's less mobility around that, so that's something you also need to consider. So if you are buying a home and it's a forever home, then you know that you'll be there for a long period of time. But if you're buying something and you're not too sure you're going to live there, rather buy in an area you're 100% sure, based on just being less mobility in moving. Then let's talk about pros of renting. So the first thing is that there's more flexibility. You are able to just relocate. There's no long-term financial responsibility. Basically, especially if you have no option, you have no reason or intent of staying in that one place for long, you know that after your lease expires you can move and go to another place. So there's flexibility there. Then another thing is that there's a possibility of living in an area that you can't afford to buy, which is true for me. I'm currently living in an area that I personally can't afford to buy in, but I am living in that area by renting. Then another thing is that moving out is way easier than it is owning, which is something I've mentioned. There's no finding a new tenant, there's no buying. That's all the landlord or homeowner's responsibility. All you need to do is pack your stuff and leave once your lease expires or lease period is ended. Another thing is that the only insurance that you need as a tenant is just your home contents insurance. You don't need to cover that. So basically maintenance of it, and the outer insurance or the big insurance is the landlord or homeowner's responsibility. So yeah, that's not something you need to worry yourself about. And then another thing is that there's no worries. You don't have to worry about putting additional funds into a bond. You know, whatever additional money you have, you can use that to save or invest, whereas someone who owns the property, whatever they have additional, they have to worry about putting a bit more money towards their bond. Then another thing is that your deposit, when you do move out, you're going to be getting your deposit plus interest, provided that everything is okay and you've left the place in the right manner, meaning you're getting your, basically your money was growing for your, on your behalf, giving you an interest. So what is very important as a tenant is that your deposit is in an interest bearing account. Your landlord has to put your deposit in an interest bearing account. That is by law, and when you move out they have to give you that plus the interest that was incurred over the period that you were there. You also have the right to request statements of that money. So you can request, hey, can I see a statement of the savings account where you put my money in, so you can just keep track and check that this money is actually still in the account and is bearing interest for you. This is your legal right. Cool. Then a con of renting would be you are bound by the rules of the lease agreement. So you basically can't do anything without the consent of the landlord. So you can't, you know, be flexible and free and do whatever in the property because you essentially don't own it. Another thing is you can't make changes to the property without the landlord's consent, basically almost similar to the first point. So if you want to, you know, put, I don't know, paint the room green or yellow, you have to ask for consent. Another thing is that you don't, sometimes you have to deal with the rental agent instead of dealing directly with the landlord, which can make the process of dealing with issues a bit longer because it's going through a third party and not going directly to the landlord. Another thing is that this is not a, there's no wealth creation or return on investment for you as the tenant. The only thing that you're essentially doing, because you know this home doesn't belong to you, the only thing that you as a tenant are doing, you're basically contributing towards the landlord's home loan, if that's the money they're taking and putting into the home loan. So there's no wealth creation or return on investment for you. And then another con is that you have no control over the annual rental inflation yearly. This is very linked to the inflation as well. So there's no control. Like if the rent is going up by 10%, there's no control you have over that. You just have to pay the extra 10% rent. So yeah, that's another thing. And then the last thing is that there's no guarantee of a lease renewal. So basically you can't guarantee that you're going to get your lease renewed. The landlord can say, thanks very much, we're no longer renting this place out, we're doing it at an Airbnb, goodbye, at the end of your lease period, please leave. So that's the pros and cons. Both of them are, I need to just weight both of them based on your financial situation. Buying could be perfect for you because you're financially ready, and maybe renting a bit longer would be great for you because then it allows you to save more money towards buying your property at the end of the day as well. So location is very important, something that I learned. Being financially ready for the responsibility is also something very important that I learned. And another thing I learned is don't go around making inquiries because they could affect your credit score. Rather make an inquiry when you are 100% certain that you are really in the buying process and you are financially ready for all the costs that it entails. So yeah guys, leave a comment down below, let me know, have you bought your property? What of the process did you learn? What mistakes you learned? As I've mentioned some of my mistakes. And yeah, if you are someone who's also feels very passionate about renting instead of buying, let me know down below why you feel that way. Let's have the conversation. Yeah, thank you so much for tuning in. As always guys, keep hustling. I'll catch you guys on my next video. Bye.